This podcast is for informational purposes only. Please speak to a qualified tax professional about your specific circumstances before acting upon any of the information provided.
Hello, and everybody. Welcome to episode 1 of Crypto Tax Sucks. We've called this podcast series Crypto Tax Sucks because, let's face it, it really does suck. So we're going to be drilling into some of the basics of cryptocurrency taxes today. And I'm joined by two very special guests. We've got Louise Lane, who is Associate Director at Wright, Vigar. And I've known Louise now for over 4 years, and I would confidently say that Louise is one of the UK's leading crypto tax accountants. We've also got Jeff. So Jeff is our industry participant today. Jeff is CEO and co-founder of Coinpass, one of the only FCA regulated crypto asset exchanges in the UK. And I'm sure we're going to probably get into some discussion around market events like FTX and Celcius as we go into this. And Jeff can tell us why Coinpass is different. So I'm going to jump straight into questions. I've got some of them here that I've kind of prepared, and we've also got some from the community as well. So ahead of this podcast, we sent out a Q&A to all of our recap customers asking, some common tax problems, and it'd be good to get those answered at the end of this podcast episode as well. But I'm going to kick off by asking a simple question to both of you. We'll start off with you, Louise. Why does crypto tax suck?
Wow, that's a big question. Where do I start? I would say the biggest reason it sucks is most people investing or using crypto assets don't realise the quantity of the tax events they're creating. So classic example is they put 10 grand in fiat, they've done whatever in the crypto sphere, they off ramp for 5 grand, they think they've made a loss, whereas in reality all your transactions are pegged at the market value at the time of doing them, and you might have huge gains and losses which are just, you can't intuitively work out what they are without running it through some kind of tax software like Recap.
Okay, and Jeff, are you kind of seeing, what you've seen from a customer perspective? Do people come to you guys and ask how to account for it or what to do?
The simple answer for that is export your CSV and send it to your accountant. Is kind of because we're not tax specialists, we're also not tax advisors, but we definitely see a more mature approach to it. I mean, it was very, let's say 4 years ago, it was very, does Coinpass send my details to the HMRC? And the answer to that is no. You're responsible for your own tax positions. But I think people are looking at it far more in depth or seriously than they used to. So they're doing their exports, they're using software like Recap. They're more aware of their capital gains position and trying to use more of those vehicles more appropriately. And I think that's where we've seen a lot of people have their personal account and their, say, limited company account, because they use funds in two different ways, from their limited company to their personal. So I think what the HMRC has kind of done is probably more of a lack of education and more of a lack of outreach around how these tax positions are handled. But I think our customers specifically are taking a more mature approach to it and trying to use those gains appropriately.
That's really good to hear. I mean, one of the main reasons why we started Recap is, yes, you need to calculate your taxes to pay your taxes. But as a result of calculating your taxes, you then get this kind of wealth planning effect. You know what you need to put aside. You know how to maybe optimize your tax position at certain times of the year. You can even plan, what your exit value is in the market. What would I pay tax wise if I was to exit everything and buy a house? Those are the kind of nice things that you can get as a result of doing your taxes. And like you say, I think the sophisticated investor understands that. And I think there's probably a bit of a lag from retail to come up to that kind of standard and that kind of level of thinking. Louise, I don't know if
So as I say, it's interesting you mentioned strategy on there, because in some cases it might be worth taking a short-term loss to recognize some losses to effectively buy the dip and reset your taxable position for the next year, depending on market conditions.
Yeah, absolutely. Yeah. But it's, how do you realize that if you're the average customer who's just using an exchange? It's the education piece that you mentioned. Who's telling individuals that they can do that? I mean, at the minute, who's telling them that they need to file a self-assessment tax return? Louise, can you break down like the basics of what an individual needs to do to get started with their crypto taxes?
Yeah, I would say almost every conversation I have with a new client coming to me is, you just need to get a handle on every transaction you've ever done in crypto. Because of the way it's taxed, most people are subject to capital gains tax. It's an investment activity. So the way crypto assets are taxed for capital gains tax purposes is there's this pooling concept where, let's say we're just talking about Bitcoin, every Bitcoin you've ever bought or acquired as income or mined feeds into the calculation of a disposal now, because you've got this average cost basis. So you can't get your current tax position up to date without addressing every transaction you've ever done in the past across every exchange, every wallet. So it's an aggregation of getting all of that data into some software like Recap, working through it, making sure you've dealt with the prior years before you deal with the current year.
Okay, that's a good kind of overview. Just going back to Jeff's point on education, if I'm an individual that has a full-time job and I'm on PAYE, what are HMRC doing to inform me that I need to do a self-assessment tax return? Like, how is crypto taxes even on my radar?
Yeah, I mean, under self-assessment, HMRC don't need to tell you, you need to tell them. So it's up to an individual to work out, is there a need for me to file a tax return this year? And you're absolutely right. So many people that I speak to that have got into crypto have never had to do a tax return before. This is all new to them. And the onus is to work out, do you have something that needs reporting to HMRC? And for most people, historically before crypto, it was a no if you've just got a job, unless you sold a property or something like that. But now the onus is on you each and every year to reassess that tax position. If your gains are over the current capital gains tax free limit of 12,300, then you've got an obligation to file. But even more so, if you're already doing a tax return for other reasons, you can't avoid filing if your gains are below that limit, where you've actually made disposals worth about 48 grand. It's 4 times the annual exemption. So if you're already doing a tax return, you can't ignore the crypto tax just because your gains are below the 12,300. You still have to disclose that to HMRC and give them all your capital gains tax calcs. That's an important point that people get tripped up on.
Jeff, what do you think? Do you think that the revenue HMRC has a bit of a role to play in educating people around filing taxes? I kind of see it as maybe it's a bit of have their cake and eat it at the moment. In the sense that you have to pay tax on it, but we're not telling you, we're not educating you in the first place.
So I think they're definitely doing a better job than the IRS in the US. I mean, they kind of already know exactly what you owe. You miss a penny, you go to jail. They're definitely not in that kind of sector, that kind of light. They could definitely do more. I know that the tools are out there for people to discover and people to read, but I think the language needs to evolve a little bit more. Not make tax only to be feared, but something to, like a vehicle to use to ensure you hang on to the most wealth as possible. People are putting a lot of time and emphasis on kind of getting into the market and growing as much as possible, whether it's investing into DeFi, liquidity staking, ICOs, IDOs, it doesn't matter. They need to focus on the off-ramping part of it as well, the tax exposure. And I think, from my engineering background, my doing financial modeling, the number nerdy part of me, I actually quite enjoy looking at this kind of things to try and maximize what I can and can't do in this kind of space. So, without trying to make it kind of the heebie-jeebie, boogeyman in the room, HMRC are there to work with people, not necessarily to slap them on the wrist. The slapping on the wrist comes from not divulging 5 years worth of trading data, and then you suddenly get a nasty audit. That kind of stuff doesn't go away. And I think with the technical improvements HMRC has made around stuff with open banking and payments and etc., I think those kind of barriers are starting to come down. But I think they need to maybe improve the way that they kind of put their content out there in terms of how to tax it, how to tax it, when it's taxed, the type of activities that are included. But it is a very fast-moving space. So they're obviously working as hard as they can to make it as fair as they can. But a lot of people are just completely unaware that this is even a taxable event. They might put it in the same thing as like forex trading or spread betting or something like that, which is classified as gambling.
Yeah, I mean, you could kind of argue that tax is a good thing because it's showing that crypto is growing up, right? It's turning into its own distinct asset class. And that it doesn't matter what asset class you have, you need to pay some kind of tax on it, right? So is this just a consequence of an asset class that barely existed 10 years ago? It now is growing up, and despite FTX and other issues that we have at the moment, this is quite a well-established asset class that people are generally interested in, and therefore tax is just a part of being an investor.
No, I couldn't agree more. Yeah, definitely. The more regulation that comes in, registrations, there are a lot of things in the CFD world or in the normal trading world which don't apply to crypto right now. I can see those kind of happening, not only segregation of client funds, that kind of stuff, but also accountability and transparency, doing proper audits of systems. We've had countless conversations around network events through the bar about how poor some of the reporting on an API level some exchanges offer, because it becomes very, very tricky to even calculate your open positions, let alone the balances that are being held. So I think there's still a lot of work to be done, but I think the more people want to get exposure into crypto or use it as a payment service, the sector is only going to become more legitimized and more professional as time goes on. And I think the tax code will have to kind of recognize that and kind of keep picking up pace.
I mean, I'm interested to hear, like, just as a result of like market events at the moment with like FTX, Celcius, BlockFi joined the Chapter 11 bankruptcy process yesterday. Do you think this is all going to have like a really big cooling effect on the industry? Where do you see it going?
Yeah, definitely. I thought we were going to come out when we had the first lunar shock. And then I can't remember that we had that many events in the last 6 months. It's very tricky to even keep up. But we've had at least kind of 3 or 4 big, almost black swan events in a very, very short period of time. And we all knew this bear market was going to be quite a long one with the war going on, with inflation, everything else. These are just 4 additional events to kind of add to that downward pressure. And I back when I did some streaming back in 2018 and 2019, like this is the last time you could buy Bitcoin under 10K. I think it could be wrong. I don't know. But I think this bear market is definitely going to extend, not just to February, March, April of next year. I think it could last the majority of next year. So I definitely agree there will be a cooling effect. From our customers, we're definitely seeing less people exit the market. So if people have bought positions in the $20,000 range, $18,000 range and above that, they're definitely kind of hodling and sitting tight. I don't think we're at a capitulation phase just now. I think the market's built up of a lot of hodlers, but there are still new market participants that are seeing it as an opportunity to kind of get in. And they're either arming themselves with their savings or their income capital or whatever it's going to be. People are dollar cost averaging in, or people are making very large purchases, 20, 30, 100,000 pounds. We regularly see coming into the platform every other day. So I think the long-term look of the market is very, very cool or very cold. But there is still a lot of bullishness, even at these kind of price levels. People wanting to get in, wanting to get exposure, and maybe not necessarily want to trade it, but make a sizable allocation in their portfolio.
All the more reason to keep on top of your taxes, right? All of those
Most
people that are
definitely,
making double down plays, right?
Yeah, and those double down plays can turn into double digit, tax exposure. a year, 2 years, 5 years from now, depending what vehicle you're holding it in. One thing that's been really interesting on our kind of more B2B business side is we're seeing a lot of interest from SAS pensions, small self-administered schemes, that have a very effective tax rate for these kind of assets. So while we still see a lot of retail flow, we see a lot of people signing up with their limited companies. It could be from property investors, bricklayers, law firms, doesn't really matter. These other more sophisticated vehicles and trusts are starting to want access to this asset class, and they want to make do. We don't make do. They want to leverage those tax efficient vehicles in order to get access to it. So that's client driven demand that's now filtering onto the business side, and those business related contacts want to deal with a properly compliant, properly regulated, grown up exchange in order to handle that kind of flow, because ultimately their brand is going to be on the line.
Interesting. So they're effectively, your customers are taking a long-term view of the market, right? You don't choose a SAS pension unless you're taking a long-term view of the market. So I'm interested to see what do you kind of see, boots on the ground, Louise, from your side? Do you see clients, using their tax information and information on their position to then try and plan and move it into tax efficient structures?
Yeah, for sure. We've got lots of clients who individually have high salaries or high other income, but their whole concept of strategy is to hodl for capital appreciation whilst getting a really good yield in the meantime. So they know they're picking the crypto assets for the yield potential. So straight away they're putting those through a limited company, an investment company, so that they can shelter that income from their personal, from their personal tax rates, which are, even worse than they were a few weeks ago, or soon to be anyway.
Yeah, I mean, it seems like a constant battle at the moment. There's something in the media every day around crypto and it's negative. And who knows where it's going to go yet. I think minor capitulation is what people are saying is probably going to be the next wave of, the downturn. So who knows when we come out of it.
Yeah, I mean, we had a couple of our clients move from either selling into GBP and then moving into USDC, and they've made like a 20% gain just sitting in US dollars versus the pound. So I think there's, the instruments are there to be, what are taken advantage of, but now they've got 2 more taxable events that they have to put on their tax return, right? So there's plenty of opportunities there, but when it comes to the auditing and account keeping, I think some people are definitely shooting themselves in the foot.
Cool. So I'm gonna move on to customer questions now that we've got. So we've had over 20 questions. I've done my best to kind of distill them down into the most common ones. I think we'll be surprised by one of the questions. And the first one is, it's be a great one for you to answer, Louise, but it's, I only pay tax when I withdraw something into my bank account, which is a very frustrating question for me, because it's obviously not the case. But do you experience this question?
Yeah, like so often. And it's hard because, I know we've had really, really detailed guidance from HMRC since December 2018, but it's just not filtering through. And I think it's probably a byproduct of how easy it is to interact with crypto. You just hear about it from your mate, you download the app, all of a sudden you've just bought some crypto with Apple Pay. You don't realise what you're actually getting into. I have so many clients who've been doing some really complex staking, leveraged activity without even knowing they've done it. So I just think it's so difficult to even appreciate what you've been doing before you even think about the tax consequences of it. And I don't really know what the answer is, because as much as HMRC can promote it and educate people, is anyone going to listen? If they see an email from HMRC, if they see HMRC are podcasting on something, Do they care? You know, it's like, how do you reach these people, and how do you, you know, I guess that the threat of HMRC compliance is possibly a way to do it, because from like right up until now, HMRC have been very much on an educational type, you know, let's just try and get this right kind of thing. But we know from the things that are coming in with the CARF, and there's going to be all sorts of legislation and regulation that comes in that kind of means that all the information about your crypto activity through exchanges is going to land on HMRC's desk. They're not going to have to ask anyone for it, and this is worldwide. So there's going to come a point where HMRC have all the information they need to start targeting taxpayers, and I guess that's what's going to really motivate people to understand the tax positions and make sure they're getting ahead of it, because it's much better if you get on top of your taxes now, voluntarily declare your back years, and you're in a good position going forward, because if they come to you before you go to them, then you're looking at a minimum of sort of 15% penalty on top of the tax and interest that's due.
Ouch.
Yeah, like minimum, you know, it's probably going to be more than that, to be honest.
Yeah, I mean, my philosophy on this is I want to sleep at night. I don't want a brown letter dropping on my doorstep, because every time I do get one, you know, I get a little bit nervous. Is it related to my company, or is it related to me individually?
Yeah, it doesn't say you have to peel open the wrapper. It's like, is it? Oh no. Or it's just a reminder. It's, okay, nothing. Fine. Reminders are fine.
I think it's using the assets in the real world as well. If you want to off-ramp, if you want to use a substantial chunk of money to buy a house or something, the solicitor wants to verify source of funds. You know, a prerequisite of using the money in the real world is, you know, making sure your taxes are in order.
Yeah, I can remember talking to...
I had the same thing about that, where I've had to kind of resave for a deposit, because a lot of my gains were going to go into a property, and even if I'd done the source of funds, it's from an FCA registered exchange. Irrelevant that I'm the CEO of the exchange, but the fact that there was any form of gains from crypto were just not going to be accepted for any source of funds, regardless how many times it was either audited or verified or etc. And that was the solicitor talking, not the bank or the lender or anyone else. So I thought that was a really interesting bit, that you know, all the people that are doing a lot of hard work to build up their capital through crypto could all be for nothing, depending on what the climate of crypto is to go into real world assets. That's just my own personal experience from about 12 months ago.
I would say we have had clients who've got past the solicitor's checks with source of funds. So, you know, maybe it's picking the right solicitor, maybe it's you know, the evidence and the assurances we can give. You know, certainly they were interested in recap reports, seeing the trail of the history of how the funds are built up from just a mere 5,000 in savings. You know, you can trace it right through to see, you know, how you've grown to the asset value you have now.
Yeah.
Cool. Thank you for that. I'm going to move on to the next question, which is the one that we've seen in the media quite a lot, which is all surrounding FTX, and how do we handle the tax treatment of assets that are stuck or lost on FTX? Is there any way to write them off? You know, what can be done for people that are trapped in this situation? And just for reference, I was speaking to somebody yesterday who should remain unnamed, but he suggested there were 80,000 UK customers on FTX as an absolute minimum, and we now have Celcius, BlockFi, Voyager, so there's potentially over 100,000 UK individuals that now have assets that are trapped on these platforms.
Not to mention Genesis and Gemini have added, not in the default list, but in the blocked withdrawal list as well, so that number could easily be 3 or 4 times that.
Yeah, I mean, it's quite a dire situation, right? Especially if you need to pay a tax bill, you know, maybe you need to draw down those funds to pay a tax bill. You know, what do you do?
I think it's a really hard question because, well, first of all, let's take FTX. We don't know the exact terms and conditions that were in place when you interacted with them. You know, did you just deposit? Did you, pledge some tokens in a staking protocol, or what did you do? Each of them have their own terms of service. And what we found is over the last sort of 6 to 8 months, all the exchanges have been changing their terms of service anyway in reaction to HMRC guidance. And so you kind of need to know what were the terms of service at the time you interacted, and we really need to see how the Chapter 11 proceedings play out, because it's probably a bit too soon to make a claim, which is not ideal if you've done loads of activity and have no product of that activity and you're thinking, well, I really don't want to pay tax on that, or I don't really want to pay tax until I know whether I'm going to get any losses. But we're just in a real position at the moment where it really does depend on the circumstances.
Yeah, and I think for FTX, like, we could probably, it might be too early to say it, but I'm going to say it anyway, but we're pretty much dealing with fraud, right? We're dealing with massive misappropriation of customer funds. And generally...
customer funds and investor funds, and that's where the act is kind of going. There's a big emphasis on the customer funds, but I mean, the VC money that went in was also misappropriated. So you've got this giant black hole, and now you've got different jurisdictions fighting each other who can get their bankruptcy proceeding through first, and who takes preference.
Yeah, I think I read this is going to be one of the largest bankruptcy cases in history. It could be a decade.
Well, the insolvency practitioner is the same guy that did Enron, and he goes, it's way worse than that. It's worse than Enron. And there are like that as a business case, it's taught in like business schools of kind of, the textbook, what not to do. So, we could be redefining the worst insolvency practice in history as we speak. So, I mean, I'm not sure what you do on your weekends, Dan, but I'm glued to Twitter Spaces, WhatsApp chats, Telegram, and Discords at the moment, just trying to absorb all the information that's out there. And I think it's going to take some time to even see the bottom of the hole before we can even talk about, what happens next with those customer assets, because they're most likely just gone.
Yeah, and if they are gone, the question is, can users write them off? I suppose is what we want, and I suppose that could be possible depending on the circumstances. Yeah, I think if you read HMRC's guidance, if funds are stolen or if there is fraud, then it can be difficult to claim that those assets are of negligible value. Am I right in thinking that, Louise?
Yeah, and like especially with the negligible value claim, let's say you had Bitcoin on there, but you still hold Bitcoin elsewhere, you can only make a negligible value claim for the whole pool, and it's just your Bitcoin with FTX that have gone, not the rest of the Bitcoin, and Bitcoin in itself isn't of negligible value, which is the grounds with which you make a negligible value claim. So yeah, it's a really tough one, and certainly we're going to be working with Crypto UK to try and lobby HMRC for some answers, because people need clarity, don't they?
They do, yeah.
I suppose it's also open to potential fraud when it says, oh yeah, I lost X amount of Bitcoin, and providing very kind of sketchy proof, while a platform that's kind of down and out is kind of impossible to substantiate. We saw a huge amount of fraud around the bounce back scheme and stuff like that, and that was a government-backed scheme for after COVID. So something of like, oh, my 5 Bitcoin's gone. Can I have a capital loss exemption, please? I think we'll start to see, people trying to, for lack of a better term, sorry to sully your podcast, take the piss on a platform or a black swan event of this size to potentially get out of future gains or get an exemption up front. So it's a very, very tricky position, and it's not one that's going to be easily taken by either side of the market, regardless of what happens.
Completely agree with that. I mean, this is never going to happen at Coinpass, right?
Oh, we'll never say never, obviously. No, I like you, Dan. I also like sleeping. I like being not stressed. I like being able to show my face in public. And, we have very strict controls that we work within with the FCA. And I think it comes down to our team. We get kind of asked time and time again, how do we, a smaller firm in the greater crypto space, manage to get this big, bulky FCA license that a lot of people have failed on, and a lot of people have had to move their business offshore. Huge custodians, massive market makers, yet we're able to get it done. And I think it comes down to our team. I'm from a corporate background, casinos, highly regulated, data centers, super secure, and hedge funds that are, layered with so many little Chinese firewalls of information. It's very hard to do business. But, from our COO's perspective, he's done 24 years in regulation and compliance and electronic trading. He's dealt with the FCA many times before. He has his own personal brand to deal with when working with the FCA, let alone on crypto. Our CTO worked in Merlin, Sony, oil and gas. He's got his own brand to work with in terms of being in a regulated crypto space. So the way that we deal with our customer funds, the way that we deal with our reconciliation, we've been pretending that we've been FCA registered or regulated, whatever term you like to use, since we launched in 2018. And there was no framework for the FCA to work on. So we've never had to recomply a user. We've always kept our accounts segregated purely from an accounting standpoint because it'd be an absolute nightmare. And we pay quite a lot of money for our bank accounts. Before we take a single deposit or a single transaction every month, our banking infrastructure costs us like north of $5,000 just to have a client-facing receiving bank account for those funds. We invest heavily into our custody infrastructure, which is why we work with some of the global leaders like Fireblocks, so we can keep everything segregated and secured and policied. So when we have to do an audit, or we have to, in a black swan event, shut the business down, we run a very simple spot one-to-one. Every pound that comes into the platform comes into its own place. Every bit of crypto for all of our customer deposits go to segregated individual places. And it's on my team and obviously on me to ensure that happens, securely and handled with great care. Because ultimately it's going to be my head in the noose if it all goes wrong. And I defer back to my original point. I also like sleep.
You like sleep and you don't like prison.
No, I've never been to prison, but I can't imagine it's that much fun, even for the white collar guys. And I think you can have a very successful, very scalable business without having to, misappropriate these funds. And if we go back to the original FTX example, they were taking user funds, loaning them to their own their own quant fund to algo trade the crap out of these. Yeah. But, the more we learn about this is that they had no risk controls, no liquidation threshold set on any of their accounts. So they're all able to run their, 100x shorts with client funds well into the red. They might have been 1,000, 2,000, 3,000% down and were never liquidated. Yeah. So it's less about crypto and it's more about fraud when we talk about FTX. I think just down to some of the questions we had with the FCA of like, do you have enough team to look after this? I'm like, yeah, we have tech, we have this. But they were even asking, we're a small firm of, when we first applied in 2020, we had 15, maybe 18 staff. And our COO was performing 2 functions, which they weren't unhappy about it, but they're like, okay, you're going to need to resolve that eventually. How about some of the FTX and Alameda where they had the same person as the risk officer for 2 different companies that only had 2 years of experience from all places, Credit Suisse, not great. The regulator would have stopped a lot of those kind of things happened if they were, more in line with what we've got in the UK. Having the same person being the CFO and the chief security officer, probably not a great idea. So I think regulation in those kind of cases would have definitely helped, and I think that's why we're able to stand out in this kind of market and not have any of those kind of internal control issues.
Yeah, I mean, in April, there was an announcement from the government, right, that they had this ambition for the UK to become a crypto hub, which kind of, goes in the face against the struggles that crypto exchanges have had in becoming regulated and doing business here in the first place. Is this like the UK's opportunity, to showcase that regulation is a key issue in this market, and that the UK can be the home of all of these highly regulated businesses?
I think it can, but the bar is already quite high, and I think the bar is only going to go higher. When they start bringing in like, proof of segregated funds, proof of reserve. They may put some legislation there that the exchange can also not be the custodian, something we're already thinking about. I think those are only going to raise the bar higher, and then it's just going to do the same thing that financial promotions did, and the ban on derivatives. It's just going to move more of that offshore. which is why you have 80,000 affected, FTX users. So I think there's a clear opportunity to not make it lax, but make it, maybe tier it. If you're a wallet provider or a custodian, here's a level you can operate at within the FCA. If you're an exchange or a staking app or something with trading, here's a slightly higher level one. And if you want to offer, banking services and et cetera, that might fit more into the EMI scheme. So I think it's definitely an opportunity, but I think to get more people on side, they should move away from the word crypto and maybe call it DLT. So call it a DLT hub, not a crypto hub, because crypto and DLT, while they're similar, they are two completely different things. And I think there's probably more advantageous stuff that the UK could do that's DLT based rather than crypto.
Cool. Louise, I don't think, have you got any views on, is this the UK's opportunity to kind of clear up the market, sort the regulatory logjam, and perhaps we can be, maybe we can get some of our competitive advantage back of becoming a crypto asset hub?
Yeah, I find it so frustrating. There's so many British entrepreneurs that are developing Web3 type businesses, and they're UK based. They've got no inclination to travel offshore, and they've been forced, themselves and their business is forced offshore. And we could have all of this in the UK, and we really do just need to support it more. And I believe regulatory is the key to supporting it, but then the tax is going to follow for that. We're working with Crypto UK to try and develop bespoke tax legislation, but we know with the recent governmental changes that it's just so far off the agenda, and it's quite demoralising because the current tax law isn't fit for purpose at all, and we're just trying to work with what we've got, and it's just super frustrating that we can't just rewrite the rule book quickly.
We do have Rishi, and he is a crypto bro, so positivity and hope. We can hope something better comes out of it. He's spoken at a fair few events that I've been at as well, and he generally has a positive demeanor towards it, which is good. So if we can start from that and hopefully let it trickle down, it just comes down to the constituents that keep the MPs there. They have to represent who they're representing. So this is why this kind of stuff takes such a long time. But we can only hope that with the PM on our side, that good things can happen. But I think it's going to be a slower process than the next bull run.
I'm really looking forward to the Royal Mint issuing their NFT that Rishi promised.
That's not going to happen. We'll sort the budget. We'll put an NFT. We'll put it on OpenSea. It'll be great.
That's how you plug the hole.
Oh no.
I'm going to move on to one more question. Actually, we've got two more. So the first one is staking rewards. So if you have some staking rewards that are only redeemable if you pay a transaction fee, does that defer the taxation on earnings until they are received? Does that kind of make sense, Louise?
Yeah, I'm guessing that one's for me.
Yeah.
So there isn't an awful lot of guidance on when this kind of income would be receivable. If we're talking staking rewards, most likely it's an income reward, most likely it's treated as miscellaneous income. And I guess there is no guidance on it, but looking at first principles of how these kind of things are taxed, you would expect that no one would be surprised to know that if it hits your wallet, it's taxable for sure, yeah? But it may be taxable at an earlier point, and what HMRC says, if it's credited to an account that you're free to draw on, then it's taxable at that earlier point. So let's say your staking rewards are racking up, they're accruing, and you can actually draw down on them at any point by paying a transaction fee. I would say that they're readily available and they fall to be taxable at the time they're credited. The fact that you've got to actually pay a transaction fee to withdraw it, it doesn't mean you can't withdraw it. I would say, the kind of situation where you can't withdraw it is if there's some kind of lockup, locked token where it's credited but you can't withdraw for say 12 months or whatever. If you physically can't get to it, then yes, not taxable until you receive it. But for sure, if you could withdraw it by paying a fee, I would say that's taxable as it's credited.
That's So we're about to launch staking probably January next year. And the way the FCA kind of sees staking in UK, the way that we're sitting under our license, is that it's about fixed outcomes. So how long is it locked for? What's the rate of return? As soon as it gets to variable, you're into loaning and EMI and payments, and it's just a bit of a nightmare. So we're kind of not redesigning, but putting a little bit more nuance around the product, around a stake and unstake. But we pay all the gas, right? So if you want to early withdraw, it's fine. You push the unstake button, that capital is recredited to your account a day later. But we're doing all of the gas operations in the background. So there's no actual gas fee for taking it early. You just don't get, this, let's say it's day 3 of 7. Then you won't get the 3 previous days because you haven't done the lock-in period. So with that kind of in mind, how would that line up with what you just said around staking rewards and paying a fee to get out?
I would say as soon as you press to unstake, whatever rewards are credited to you at that point, whether you pull them off or not.
Yep. That's the event.
Yeah. I would say that's the event.
That'd be interesting.
I mean, I do need to heavily caveat this with, there is absolutely no guidance on it, and this is purely based on first principles and how we think HMRC might interpret it.
For sure. Yeah. So the idea around the product we're building is you'd have a subscribe, so like an auto rollover. So let's say you stake 100 DOT today, and then a week later, I'm just making up the maths here in my head. It's not the offering. Don't come back and say let's say the following week it's like you have 101 DOT, and because you're automatically restaking it, the 1 DOT would be credited to your account and then put straight back into the staking pool, and then you'd be staking 101 and then 102.50, and then it's supposed to be a way to kind of hodl dollar cost average and kind of automatically stake week on week. And we might build some 30-day plans, some 3-month ones, etc. But you're still able to unstake at any point. They're not completely locked and keeping people away from their funds and handcuffing people. The last thing we wanted to build is a product that was going to handcuff people. But it's interesting around that point. At the point it's recredited, that's the taxable event versus when it's unstaked. So maybe with that in mind, maybe we'll have a bit of an idea on the tax bit. If you put 100 DOT in, at the point you unstake is when your actual taxable event takes place. So that might be something we put into effect. Because if people are going to stake for a year, why should they have taxable events every single month leading up to that? So.
Yeah, this is where like staking rewards can really screw you over as well if you don't treat staking as almost like running a business. So if you receive some staking rewards, you need to pay income on those rewards, and you need to value those transactions in pounds. And if people aren't putting money aside and the market drops, then you might need to sell some of your crypto to then pay your tax bill, or you might not have enough crypto. So
like a nasty VAT bill at the end of the year. Oh
yeah,
I forgot about that.
I've never had one of those.
I have when I was a consultant. I'm like, oh really? That much? Wow.
Yeah, I mean, that's what you get when you run a business, right? And again, it comes down to individuals that are participating in these products that don't necessarily plan for these events, and effectively they're going long crypto by not putting money aside, in the hope that the market is going to keep rallying, rather than putting money to one side and having the comfort that they can actually pay their tax bill. Do you see a lot of this, Louise? Yeah,
I mean, especially this last year, we've got people made crazy high gains in the 21-22 tax year, ending 5th of April 22. Their tax is due in January, and genuinely some clients that just don't have the crypto left because they didn't set aside fiat in their bank account to pay the tax, and the value of the crypto is less than their tax bill. And it's just really hard to imagine HMRC having much sympathy for that, because you didn't know the market was going to crash when at the time you received the income, for example, it's taxable at the time you receive it based on the value you receive it. So their expectation is that at that point in time you set aside the tax that you're going to have to pay regardless of any subsequent drop in value of those tokens. I think the best we can maybe hope for is some kind of leniency on time to pay your bill instead of having to pay it all in one.
So it sounds like the old adage of when a property investor builds a very large portfolio, bought a whole bunch of terraces at 20k. They're all now worth 150k each. There's 20 or 30 of them. They pass on, and then suddenly there's £1 million inheritance tax bill. You have to liquidate literally the entire portfolio just to pay the bill. So there's a lifetime of someone's work just gone. And it's kind of reminiscing like this, but in a much shorter time frame.
Yeah, absolutely. Yeah. So we're going to get on to the final question now. And I think a lot of people are going to be asking this question. We've just had a bull to bear market cycle. So lots of gains being created, followed by potentially lots of losses. And people are asking if there are any mechanisms to carry back losses in the UK.
Oh, good question.
I'm pretty sure the answer is no.
Damn it.
No, it's just plain and simple no. You operate in a tax year, so if you haven't finished the tax year, any loss you make up to the 5th of April of the tax year it will be automatically offset against any gains in the same tax year. However, once you've ticked over 5th of April, no subsequent losses can be carried back to any prior tax year. Once you make a loss in a tax year, let's say overall in the 21-22 tax year, you've got a 50 grand loss, then that can be carried forward indefinitely against any future gains you make, but can never be carried back to a prior year. And also a big problem we've got is people with, high income tax based on, staking rewards, and then in the same year they've maybe got a capital loss from trading activity, and the two can't be offset either. You can't use that capital loss to offset your income tax on the staking rewards, unfortunately.
Yeah, no, they're isolated baskets. But does that also have to be done? You have to file it in that year appropriately as well. So if you miss a year filing it, I should have filed this last year. Does that mean it's kind of gone?
You've got 4 years, to go back.
Cool.
Yeah.
So there's a crypto loss you hadn't filed in 2018. You can refile 2018 with that loss and then carry it forward.
Yeah, just thinking I'll have to get my fingers out to check the years we're on. It's 4
Well,
years up to the 5th of April.
Yeah. Some of those losses might be on exchanges that don't exist anymore.
Yeah, for sure.
I have a calendar entry. It's the worst day of the month. I log on to every platform and get every single statement. Whether it's a platform I use or a bank account or my spare Monzo account that I rarely use, I go and get a statement from every single one of them every month. It's the most boring admin task, but it's for this very simple reason, for tax purposes and business purposes, and keeping track of all of my capital in various pots and various portfolios. It pays to do your admin.
It really does. It's so important. We've seen this with FTX already. The API's down. We're hoping at some point it might come back up. Luckily, I would say, if you've already got your FTX your API within Recap, then all those transactions are stored, aren't they, Dan?
The only kind of problem with that is there a rumor that there's big chunks of the database have been deleted. So even if that API does come back out, there might not be any data to retrieve. We don't know yet. This miscellaneous accounting backdoor that the CEO had. I don't do accounting in our business simply because it's not my strong suit, and B, I shouldn't do it. But the fact that access was there for Sam is just
crazy.
Mind-bogglingly scary.
Yeah. I think we can kind of summarize that crypto tax sucks because of record keeping and exchanges kind of going under every 5 seconds. Is probably one of the reasons. Second to that is probably the volatility in the market. It's going to kill your staking positions. And then the timing of your tax returns for carrying losses is probably the third factor. So unless you're on top of all of those things, you're screwed basically. And we summing this podcast up with a really big negative at the end that everyone's screwed.
Crypto tax starts and don't do crypto. Thank you. Signing off. Have a good one. No, but I mean, on top of that, I think there's still, the positivity of people going into this space is still very, very large. You keep on top of that stuff, you can still make gains. The fact that you can, buy an asset and move it to any venue on earth and trade it or do payments with it or eke out some extra yield that you would not get in other markets while the rest of the world's getting clobbered. I still think there's a lot of reasons to be in crypto. So I think all these kind of things right now will come out in the wash. I think they're short-term problems in the grand scheme of things. If we're talking about this low point in the market in year 12, of the market existing. And 2, 3, 4, 5 years from now, we have a positive tax code, we have better regulation, we have better compliance, we have better segregation of funds, better protection for users. That's a lot of work in a very, very short amount of time to mature as a market. So this is just kind of the cost of being on the bleeding edge of fintech and financial. So, I think a lot of people are cool with that.
Yeah. I think it's safe to say you could probably remove yourself from all of these issues just by taking a longer term view on the market. Pick a reputable exchange, pull your records, buy your crypto and move it straight into self-custody and sleep at night, right? Know what you have. Yes. Keep going back to that one, but it's priceless. I've got 2 kids that don't sleep, so sleeping at night is a major issue in our house. But yeah, if you take that long-term view on the market, you're going to win, right? You're going to ride out the volatility. You're going to forget about doing your taxes because you don't need to. And you can wait for the market to mature and a lot of these issues to be resolved.
As long as the HMRC doesn't adopt an unrealized gains policy, I think we'll be fine.
Oh, God, yeah.
Yeah, don't give them ideas.
Yeah,
just don't ever mention that again.
No, it's fine. But like the long-term approach, going along only, does have some kind of merit. So maybe when you're acquiring crypto now and going along and recording them on your ledger, and holding for a 10-year period, the tax code in 10 years might be way more forgiving about that long-term hodling and that long-term acquisition. So we'd have to wait and see.
Cool. Well, thank you very much for your time. We're going to wrap this up now, and the next episode we're going to get into the weeds a bit more on DeFi. So we're in the process of inviting some guests on at the moment. Again, we're going to have the format of a tax advisor and somebody from the industry, and we're going to get into some of the nitty-gritty around HMRC's DeFi call for evidence that they put out there in the summer, which was very controversial, and we're yet to see any impacts as a result of that call for evidence. And we're going to get some questions answered on all things lending, staking, liquidity pools as well. So thank you all for your time. Cheers.